Hey, a very good evening to you traders. This is Mark. Welcome to your daily trading video. Okay, a lot of stuff to cover. Let's go. Dow, big monster move yesterday. So what happened today? Well, first of all, what am I always looking for after a trend day? I like to mark off my support levels from the prior day. That one's a bit ambitious, but you know, the ones near the high, mark off the prior day's high. And a classical setup is that you drift down overnight, you drift up overnight, you sell off at the open, you retest these supports, you dip under for a bit, pop back above, you take the trade, and you look for a retest of the prior high. That's a nice classical trend day setup. And then what happens after that, who knows? Sometimes you do a little fake out and you sit around doing nothing. Sometimes you then drift lower, sometimes you put another leg in. But today, completely different. We did not even pull back a sniff of yesterday's move. You know, we didn't even hardly encroach into it at all. Sat there, pushed up. Yeah, we got a little bit of a flurry to the downside at 2:30 UK US Open time, but then we've just chugged up and up and up and up. And we're going to be closing at all-time highs on the Dow, sitting near it now. We've got about 30 minutes to go, and we aren't very far off. It would be interesting to see if we just have a final flurry. Now, compare that to the tech sector, the Nasdaq. What an absolute, complete different scenario we had on that. Let's put on a 15-minute. Honestly, at the open, we just got this most brutal selling with no pullbacks. It was just huge volume and just got smashed. Market open, bang, and we just came off a massive amount. I've just put a little retracement tool on here from the low of yesterday to the high of the overnight session. And we even went through the 50% on that and testing this kind of trigger area, which you may be familiar with if you've watched the strategy for trading FOMC, ECB central bank type announcements. But we almost got to that. Now that's pretty brutal move, and even now we've only clawed back a little bit. Even if you look at the percentage move from, if I can just move this quickly without, there we go. If we look at the percentage move from the open to here, we've only pulled back about 50%. You know, we have not pulled back much, so which is quite telling to me. It looks to me like the selling is not quite done yet. However, you know, the line in the sand to change that thesis is obviously going to be that little high there. So there's this sort of range up to 14,800 cash on there. If we start getting above that, then the thesis has changed. But while we're below that, you know, this is interesting. And look at some of the stocks that caused this. Facebook, absolute smash from the open, brutal down there. I mean, it was a very, very extreme move, and then people stepped in and bought this back up. But again, we haven't taken out the high. Amazon, very, very similar move on that. Netflix as well. These are almost identical charts across the board. Actually, Netflix looks far worse, doesn't it now? I haven't looked at it for a couple of hours. That does look pretty brutal. Perhaps the ones with the highest PE and the most sort of speculative are getting hit the most. Tesla not quite the same, but still the same pattern at the open. But pulled back quite a bit. So the theory is, and listen, let's take whatever the so-called experts say with a pinch of salt, is that Donald Trump isn't so good for tech. However, he is allowing, or is he recommending or encouraging, should I say, people like Apple to repatriate those funds for a flat 10% tax as opposed to whatever they're paying now. And what will people like Apple do with stuff like that? They're going to spend it on buybacks, dividends, M&A, reinvesting into the business. So it's a good thing, kind of things. So, but put that to one side. Why has this happened? It doesn't matter. It could be that funds are rotating, as another trader mentioned to me yesterday, from tech into, you know, construction, utilities. That could be perfectly feasible. Moving into steel, you know, etc. Mining away from tech. That's a perfectly feasible thing. It doesn't matter. We don't know what's going on. I know that a lot of hedge funds hold these stocks, but the point is, these have got to be on the watch list for day trading, for swing trading. You've got to have Apple on there, Netflix, Facebook, kind of Twitter. Not really the same, is it? It's a bit of in a world of its own at the moment. But you know, the usual things: Facebook, Amazon, Apple, Netflix, Google. They've got to go in there. Let's have a look at copper. Now, copper has just been crazy, just absolutely crazy. Marched up from this low level, and a massive move. I don't think we've seen a move like this for years, so definitely going to watch that. First kind of pullback we get on there, that will be obviously my thesis on copper, is to look for a long. After this vicious move, there are an awful lot of shorts trapped, and generally speaking, the bigger the move, the first pullback is a buy. How do you time that? Well, that's the art. But one thing I will be looking for is something like a moving average for it to catch up to a moving average, a first red day, maybe a second day a wick, and then a buy. Just gauging that price action, but keeping a long thesis unless we start coming way lower, and then of course we can flip bias and change. I wouldn't personally want to be shorting into such a brutal up move. One of the things we talked about before is using a 5 period moving average. Let's stick this on. This is a what have we got on this one? This is a 10, so let's drop it to a 5 and see where that takes us. So that's taking us, I mean, we've got a long way to go. The first, generally speaking, if you have multiple closes above it, and this is stolen, this strategy is stolen from another trader, and I've just adapted it for my own use, as all strategies are, at the end of the day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 closes above. That's way within parameters. The first close below, we're looking to buy, and then the exit will be on the first close above. It's not a 100% profitable strategy, but over time, back tested, that works. That's not a bad way of kind of gauging it. How I like to do it is I like to add an extra filter in there and say, okay, if we start trading below that 5 period moving average, then intraday maybe I'll look for a double bottom. Maybe I'll look for some sort of higher low, something that indicates a bit of a turn. Perhaps we push above a previous level of resistance, a support turn resistance, hold above it and then buy, and then quantify the risk below it, and then look for a further move back above the 5 period moving average on a daily, if that makes sense. Anyway, loads of stuff going on. Too much to cover in one video, but that's a little taster. I'm sure you're all involved in your own little things out there. Currency markets are moving, equity markets are moving, commodities are moving, individual stocks are moving. It's all good stuff. Hope you had a great day today, guys. Back with another video. Actually, no, we don't do a video on Fridays now. We've moved them, so it's Monday to Thursday. So back with another video on Monday. Take care.